Hello and welcome to the weekly roundup for the week ending Friday the 19th of February. Hope that you're enjoying these weekly reports. Please do subscribe to receive regular stock market content. Any questions you've got as well, pop them in the comments box below. I'd love to hear from you. I'd also like to take this opportunity to let you all know that the Atlantic Markets Research app is due to be released very soon. Lots of stock market features, live trades, trade management, support and resistance charts, news flows, dividend reports, as well as much more. Finally, as well, just want to invite you to follow our free stock market reports on tech stocks, banking stocks, IPOs, using the link in the descriptions below. Equity indices this week have had a relatively quiet session. US public holiday on Monday and China's Lunar New Year kept volumes light in the early part of the week. FTSE overall trades roughly flat across the week. DAX trades minus 0.6%, while the S&P looks set to book mild gains of 0.3% across the week. Fundamentals haven't really changed much. Vaccine optimism continues to offer broad support to sentiment, just tempered with the concerns over new mutations of COVID-19. So the huge US stimulus package still making its way through Congress. Nasdaq's been a notable underperformer this week. It trades 1.6% negative so far this week, on the expectation that the rotation out of growth stocks and into value stocks is going to start picking up. When I say value stocks, I mean those stocks that are more closely linked to the health of the US economy. Dow Jones also reflected this rotation into value by hitting a fresh all-time high, albeit trading just 0.1% higher on the week. In the FX markets, pound against the dollar, that hit 1.40, an almost 3-year high today. The pound's been one of the top performing major currencies this week, thanks again to the optimism surrounding the rapid UK vaccine programme and the optimism surrounding the reopening of the UK economy. UK data has been decidedly mixed. Inflation came in better than expected, putting further distance between negative interest rates in the Bank of England, but retail sales fell sharper. They were lower by minus 8.2% on a month-on-month measure, well below the 2.5% expected. The service sector PMI for February rebounded sharply, almost moving into expansion territory at 49.7, up from the 41 in January. Euro against the dollar, that's trading pretty flat across the week at 0.1% of a gain. The US dollar saw a strong start to the week as the US Treasury yield spiked to the highest level since February 2020, and retail sales surged 5.3% on a month-on-month basis. However, dovish minutes from the FOMC and disappointing jobless claims figures have since dragged the greenback lower. Commodities, gold down 2.5% across the week. It trades now below the $1,800 mark at levels last seen in late November. Growing expectations of a strong vaccine-led recovery has really hit the demand for the non-yielding gold. In the oil markets, we've seen some big swings this week, hitting fresh 13-month highs before dropping 2% on Thursday. However, still on track for weekly gains. And optimism surrounding the COVID vaccine rollout is lifting the demand expectations. Supply also got a bit of a squeeze this week after an unexpected cold snap in Texas. Texas, one of the largest producing states of oil in the US, and some of its refineries have closed due to the bad weather. So what might seem like a trivial bit of bad weather in Texas has seen the output cut by around 1 million barrels a day. And this has helped underpin the price of the West Texas Intermediary and the Brent crude. Inventory draws have been larger than expected, and a boost adding extra support to the price. In the stocks, certainly in the UK, big names reporting this week, some good and some not so good. So on the plus side, we've seen Glencore up 9% across the week on an impressive set of results. They've reinstated the dividend, they've brought net debt back under the $16 billion level as well. To back this up, Rio Tinto have also rallied over 5% across the week and announced a record dividend. Upbeat numbers from the miners have come amid surging base metal prices on strong Chinese demand. This is prompting speculation of a new commodities supercycle. Banks in the UK have been in the focus in the second half of the week. Barclays traded 4% lower on Thursday. They reported a 30% decline in full-year profit to £3.1 billion on a revenue of £28.1 billion. They wrote off £4.8 billion in bad loans owing to the pandemic. However, a little glimmer of sunlight in all of those negative numbers. They have reinstated the dividend at 1p. NatWest, they also released full-year results, and they've traded positive 1.4% after reporting a pre-tax loss of 351 million. Full-year bad loan provisions were 3.2 billion lower than the 3.5 to 4.5 billion previously forecast, and they've resumed dividend payments as well at 3p. So that's it from me. Thank you very much for watching. Please remember to subscribe. Any questions, don't hesitate to ask. Keep safe. Have a great weekend.